Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 26, 2018. In this video, I want to do an update on some of the trade ideas on the site, both official and unofficial. We'll start out here with crude oil. We did have a recent trade on USO, which was stopped out. I believe it was last week, but I'm still watching that one closely. I have pretty high degree of confidence. We're looking at a decent oversold bounce coming up here soon. It's still a catch a falling knife trade because it is falling down. Somebody actually asked that question in the trading room. You want to look at the daily chart of USO, which we'll get to in a second. It's far too early to say that the bottom is in, the correction's over. But I think that it probably is before we get a pretty decent tradable bounce. When I say tradable bounce, when I use that terminology, that word, I'm talking a swing tradable bounce, something that you can hold for more than just a few hours, hold for maybe at least a few days to possibly a few weeks or more. There's certainly been a lot of technical damage done to the charts of crude oil, but again, swing trading is get in, get out. I have a term, I make a lot of terms up. I have a term I labeled years ago called velocity in trading, and that basically says if you can get, let's just say 5% on a swing trade in 1 week, turn around, move on to the next one. Well, if you do that every week, and of course now there's not going to be that opportunity, but I'm just bear with me on this. If you do 5% a week, get in and out of a trade, it's a relatively quick trade. You do that 4 times a month, every week. You're looking at 20% a month. Annualize that out, even if you don't compound it, it's huge returns. And again, so that's velocity. I'd rather make 5% in a week than 10% in a month, if that makes sense. Or 20% in 6 months. So that's what sometimes I like these what I call quick swing trades, and that's what this one would be because it would be a counter trend bounce. The trend is clearly bearish, and I don't see enough in the charts to indicate a lasting bottom in crude oil. With that being said, let's dive into the charts. I'll tell you where there may be a trading opportunity, and certainly pointed out a few of these recently that didn't pan out, including that official trade. Well, that was the last one actually, but here it is. So we have, I mentioned recently at this point here, we had a divergent low. You can see we had positive divergence. I don't know where that arrow came from there. I must have hit the wrong tool, but there's your divergence line. So the divergences have simply extended on the 60-minute chart. By the way, that's what we're looking at here. If I don't make mention, the symbol in this particular chart is up here. CL, these are crude futures, 60-minute chart. So there it is, nice divergent low, and we're extremely oversold on the daily, or we're, on Friday, still well under the 30 level on the RSI. So we know sooner or later we'll get a counter trend bounce, and maybe it'll be more than just a quick bounce, maybe not. But I just want to make mention, and I did share this in the trading room this morning, these targets, that 55.26 level right there, that would be my ideal, what I would call my minimum and preferred target right now for a bounce trade in crude. So there it is. Yeah, I took, personally, I took a futures contract last night, just one contract to CL, added it again today, a second one layered on top. Looks good, and we might even add to that position. And as long as we don't violate the lows. But recently we've had a lot of failures to launch where it looked like crude was going to, have a nice recovery rally, but it hasn't. Now, one of these will stick. That's my point. And if so, in trading, if you keep your stops tight, keep your losses small, and allow the winners to run, because if we measure this out, let's see, let's do that for you. Just that alone is about a 6% gain. Now, if you trade crude futures, that's a pretty healthy pop. Even if you're not a futures trader, USO, what is it, UWTI, any of the leveraged things. But of course, if you use leverage, whether you're using futures or one of the 3-time or 2-time leverage ETFs, just account for that leverage in your stop. It cuts both ways. Um, you have to pull out your pencil sometime and say, okay, if I'm going to target 6%, how much money do I want to put in? More importantly, the most important thing is how much capital do I want to risk? So you have to take your stop. Let's say there's a 6% upside from here. That is, it's actually looked good this morning. It's moved up a little since I pointed out, but from right here, 6%. So let's say you use a 3-to-1 RR. That means you're going to allow for a 2% stop loss. Do the math on it. How much will that equate to dollar terms? Is that acceptable for you with that position size? Everybody's different, but I just want to point out that would be my minimum target, and I would see it something like this. There's certainly the potential for more if it pans out, and if it doesn't, again, you get stopped out, and we'll just wait for the next setup. But here it is, something like this. Come up there. You have the downtrend line as well as price resistance. I favor that 55.26 a little more, so I think we'd probably at least briefly pop through that trend line, maybe back test it, maybe come back in, and potentially move on up. There's some additional trend lines and resistance levels, as you can see here. 5609, 50, 59, 55. Let's look at just a couple more charts on that, and then we'll move on to the next one. Let's see. Go over to another monitor. Have a few more. This is just another variation of the same thing. CL crude futures, different charting platform. Nice clean trend line. Looks almost like a price channel there. There's the divergences. Again, this is also a 60-minute chart. And I've listed some similar but a little bit different targets here. They're in blue. I'll zoom in here. 54.87, 55.92, and 57.18. These are what I call, it's an unofficial trade. There's just not enough in the charts to put this as a swing trade for typical swing traders. This is more of an active trade. It's the kind of thing I post in the trading room. If the charts were to firm up enough, and I think we could, have a very high probability trade and something that might last for a couple weeks or more, that may make it on the front page as an official trade. But there it is. Those are some potential targets, and that would be my bounce target zone at this point in time. I just don't see enough in the charts to indicate a bounce much above that uppermost target on these three blue lines. Again, at this point in time, that can change. Like I say, the charts are dynamic, and so is my analysis. This is USO. Here's a daily chart. That's what I mean by we can't say that it's not still catch a falling knife trade as it is. This is what we call a waterfall sell-off. I mean, that's almost a straight drop there, and we have one-day kickback rally. Now, what looks good on this? Well, we have this almost doji type candle right there, and did we gap above it today? We gapped above the body of that candle, so there's a potential. It would be clean if we had a pop above an open in trading above that candle. That would give us an island reversal bottom. An island reversal bottom is when you have a candlestick. That's your island right there with a gap separated by a gap on both sides. But either way, sometimes you don't get the exact definition of a pattern, but it has the essence of that pattern. You have a breakaway candle, gap down, almost looks like let's say if you know TA, what you look for different types of gaps. This might be your breakaway gap here, right here, breakaway gap to the downside, continuation gap, and this may be an exhaustion gap. We'll see. Time will tell. But what I do know is we're extremely oversold, as I said. And again, the fact that we're up following that candle, if we can build on these gains, I should say, maybe a gap backfill. And if you're a USO trader, this would be my preferred. And right now, at this point in time, my maximum swing target up there to about 11. We'll call it to be safe. Let's say 1160. I'm seeing some reactions around there. That big bottom of that big red candle. We broke down impulsively there, tried to backtest it, failed, but I also have reactions here to the left of the chart. So there's a swing target for you swing traders that want to step in here. And like I said, trading's all about risk reward. Crude's moving fast right now, so you have to be aware of that. And gaps are always a potential problem with ETNs like this. This is an ETN that tracks and trades the futures. So if you don't trade futures, if you do trade futures, they're pretty liquid around the clock. I'll trade CL, I'll put a stop loss order, and it can get taken out at 3 in the morning. It's going to protect me, and there's liquidity, so I don't have to worry about using a stop loss order that converts to a market order when my stop price is hit. It's going to get me out so I don't wake up to let's see, well, how big was that gap down from where we closed to where we opened? It was about a 6 or so % gap down. See, that would have been prevented in futures. Most likely that occurred. Yeah, that was from Thursday to Friday. I don't know, Wednesday to Friday. See, some you got to watch out for those overnight sessions too. I'm probably going off on a lot of tangents here, but if you're trading futures, of course, you have, they do shut down for the weekends and sometimes on holidays. So that's that. But again, along if you're targeting that level, there's about USO about six, a little better than six. We'll call it again about 6% upside. What I showed you on the I believe on CL, and so a 2% stop loss would take you right about to the bottom of where we hit on Friday. And so that's that. And if you want to draw a trend line, you got to be careful when trend lines are this steep. But it's worth it to put it on here. What I mean by that is sometimes they're not as valid if they're too steep. But there's a trend line on the daily, and that would also kind of mesh with a pretty quick bounce back to that level. So that's USO. Let's move on to the next one. Here's TLT, a quick update and a sidebar on this trade too. Remember, this is part of this two components to this trade, or really a lot of the trades I put on the site or I take personally, is the fact that I made the case both fundamentally and technically that I thought TLT was, an attractive swing trade offering attractive risk reward. We are positive. We haven't hit our first target yet. Possibly I close this one out early, and I'm leaning towards closing it out now at the first target. In other words, eliminating these targets, at least for now. If you're a longer term trader and you want to hold on, I think they probably will be hit. I have a pretty good degree of confidence they will be hit, but it'll probably be sometime in the first quarter or so of 2018 when the market takes the next leg down, which I think it will after the next counter trend bounce. So where I'm going with this is part of the reasoning behind this trade was my expectation that a few weeks back that we'd see more downside in the stock market, which we have, which we would, I theorized we would finally get a flight to safety bid, even though it wasn't happening before. I figured sooner or later we were, and we did. We've gotten that so far. That's what's lifted treasuries here. We're finally seeing institutions. And more so, if you recall, I know a lot of people are new to the site. What I've been saying on this trade all along is even before the market really fell as much as it did, that a lot goes into my thinking here that when the stock market would fall considerably, which it did, and because of that, consumer confidence would then go down, which it has, and therefore uh, future growth expectations for the U.S. economy, including rate hike expectations, which they have as well. All of that plays into this trade. So, basically, if treasury bonds, remember the TLT are the bond prices, and bond prices and rates work inverse. One goes up, the other goes down. So what happens is economic expectation or growth in the economy, those expectations slow or are revised downwards. That means long-term interest rates will go down, and therefore the price of the bonds, which is TLT, will go up. So I still think that all plays out, but where I'm going with this now, if you watched my video today and saw that I closed the QQQ trade idea out. Again, that was just really to be cautious here. I'll get to that one in a second. But if that happens, if we are looking at a bounce soon, and I think within the next week, probably no more than 2 weeks out, I think this correction, or at least this leg down in the market, will end. We'll get a decent counter trend rally, and if that's the case, you'll probably see this, Treasury bonds come back in. So therefore, that's what I'm looking for. That's why I may close this trade out at T1 and then look to re-enter again. And whether if you're a long-term trader and you want some asset allocation in your portfolio, you don't want to try to actively trade, I'll make I'll add my thoughts at the time if I do close it out. But I do think you're pretty safe if you got into this one where we did. And you want to give it some room and you're willing to ride out some counter trend bounces, I think it's probably still a good long-term trade. So I just wanted to update that, show you where we're at there. And you know what, we're on that if you're in this trade or using futures. ZB are the long-term treasury bond futures. We call it the long bond, the 30-year treasury bond. These are the futures, and you can see here on the 60-minute chart, we've been building divergences. You can see we have negative divergences, so we might not even get to that first target. We're close to it now. I'll continue to monitor this. We had divergences back here, and they didn't play out. Treasuries have had a pretty steady and consistent bid, and that's pretty bullish. So for now, I'm going to leave that on. I just wanted to update that for those of you in that trade and give you both my near and longer term thoughts. Again, if it's confusing, I try to, you know, compartmentalize the, active trader stuff and the longer term trader stuff, because I know, well, we have both on the site, and I personally wear both hats. My long term accounts, IRAs, 401k, stuff like that, I may not reduce or may just lighten up on treasury bonds, and not completely close it out, whereas in my swing trading account, I may completely close out that position. And here's QQQ. Again, I posted an update on the front page. Just closing this out more so because I'm seeing quite a few. Seeing QQQ, the divergences there, although in the video I meant to cover SPY and DIA, the Dow 30 ETF. You can see that right now, I'd have to draw the lines out. We do not have, and we may get divergences, but if we do, I think it's going to be a slight undercut and then we'll reverse. So it's all about risk reward. I don't want to be caught. I'd rather book profits and leave a little meat on the bone on the table on the QQQ trade, than be caught in a sudden short covering rally if the market reverses. We don't have to have positive divergences here. We don't have to have those divergences on QQQ don't play out. I'm just looking at, again, risk reward. Market's getting pretty stretched, and I'm going to get to some of those market leading stocks, which I already did this morning. I covered Apple, ExxonMobil, Alphabet, Microsoft, Amazon. That's my thought process there. And then you look at, for example, Apple. Um, I know Apple's not doing hot today. Some people mentioned that in the trading room, but here's my thoughts on Apple. And again, I covered it in the video today, but what I just said in the trading room a few minutes ago, right before doing this video, is this level here, that 169.42 is pretty darn good resistance. I believe I pointed that out not too long ago. I'm sorry, support, not resistance, support. What I'm looking at there, you have a gap right here, and then a lot of reactions. If you really zero in on that level, we broke and then had an impulsive move down, but recovered it. And then it danced around it for a little bit there, but there's another gap around that level. So a lot of reactions and pretty decent. Not a, a scale 1 to 10, that's not a 10. Might call that a 5 or 6, maybe even a 7. It's a decent support level. And here's the thing, Apple's extremely oversold. Even if this oversold reading becomes more oversold or stays oversold, it'll probably look something like this. You get a little relief rally here in Apple, and that's all I'm looking for right now. Maybe we come back down, become oversold again, or stay oversold. But I do think the odds, especially considering such a waterfall type sell-off in the world's largest stock, this is a mega cap, billion, trillion dollar company, and that's I think a good area, pretty objective risk reward if you give it a little room under there on the stops for at least a bounce trade. And again, I think I covered that this morning. I'd be looking for a bounce back up at least here to that 181.71 level, and quite likely a little bit higher than that. So maybe about a 7%, 6-7% upside. So again, more of a tactical trade. Just get in, get out, bounce trade, I call that. Let the charts firm up before maybe considering a longer term multi-week swing trade, but I just can't make a strong enough case right now for anything more than a bounce trade. But I wanted to pass that along as a trade idea, as well as the other ones I mentioned in the video this morning. Amazon, bullish divergence right there, positive divergence on the daily chart. I mentioned Microsoft also having a divergent low on the daily chart, and those divergences playing out. It's up 2.44%. And actually, since we had that divergent low, was back with a nice doji stick. That was back last Tuesday, and we've been moving up steadily since then in Microsoft. These are the market leading stocks, and these are the big tech stocks that dragged us down. Microsoft held up relatively well, but so these are some of the things that prompted me to close that QQQ trade out. There was just too much conflicting evidence, and I just, it was not worth it to try to milk out the last few, you know, percentage points on that one and risk giving back some pretty decent profits that came, especially because they came in short order. Netflix, I may close this one out as well. I'm looking at the charts. I was looking at the charts last week, and I have this T2 level here at 250.40, and I just realized that the level I was targeting, this is such a messy chart, I need to clean that up. I have a support zone there, but it was this line right here, and it's at 250.59. Normally, I set my price targets above the actual support level I'm targeting, and usually if I have a support zone, I'll set it above that. So Uh, I may have miscalculated something there, and I may just pull this one. We're not far above it now. I just wanted to make mention, for all intents and purposes, my price target has already been hit. It was hit last Tuesday on Netflix, and that coupled with what I'm seeing in the broad markets, I can't make as strong a case here. We do have divergence on the RSI, but not on the PPO. But with that being said, Netflix is a top component of QQQ, and if the Qs bounce, Netflix will likely bounce. It's had a heck of a correction. So I wanted to make mention of that. That I may close that one out. That the risk reward is not very attractive. Now, if you're still short and you want to trail stops, lower your stops to protect profits, if the market does have that one last, we'll call it puke session where they capitulate and a sharp move down, the longs just kind of throw in the towel, and then we call that puking up your stocks, your positions, shakes out the weak hands. You get a flush out move on a selling climax. We have nothing even remotely close to a selling climax in Netflix yet. You'd see big volume bars here. Here's a, well, that's not a selling climax, so it's just one big red candle. Selling climax, you usually see a hill of volume a few days, but sometimes it can be one stick. But it needs to come at the end of a prolonged downtrend, not just right here. That came off a high, so that's why that was not a selling climax, that candle there. So if we get that, then it would mesh well with a backfill of this big gap right here and take us down there. But again, it's about risk reward. We may get that, and that's where you can set a stop right now to protect profits. Or if you're happy with where you're at, we had a nice entry on this trade. Both this time around, we shorted here and we shorted it. Oh no, wait, we shorted here. Yes, we shorted up here. In fact, we've pointed this one out as a short there 3 times this year so far. Two, or yeah, at least two or both, all three were official trades right here. We dropped that day, rallied back up and got nailed it right there. Shorted, covered somewhere in here, short it again, and then boom. So my point being is this one's been profitable all year and is very profitable right now. And again, it's about risk reward and not trying to milk out the last few cents and get caught in a sudden and sharp rally should we get that soon. Because I do think, like I said, within the next week or two, I believe this correction will be over. And when I say over again, the longer term outlook, intermediate, is quite bearish to me. I'm just looking at a counter trend rally that could last 5-8%, maybe even more than that. All right, so that's that. Let's see, I covered TLT, I covered crude, I covered some individual stocks. Oh, gold. Gold's the only one. Gold, also a flight to safety bid, and similar to TLT, a way to diversify asset allocation, something that's not related to the stock market. Still looks fine from a charting perspective. It's been trading largely sideways. So there's GLD. I do like the fact that PPO is above the zero line. So again, it's something right now. Would I be adding to it or taking it if I didn't own it? Maybe to just give some asset allocation, but I don't think this is the best time to add. It's been in a trading range and it may continue to be. I'm comfortable with this as a long-term position right now, swing position in my long-term accounts. I don't have any in my trading account because it's sort of a dead money trade at this point in time, but the technicals are still constructive. And if the market rallies, gold might come down, but it might not. There's been a lot of disconnect between the usual relationships and correlations between the stock market and these risk-off assets like gold and treasuries recently. So it wouldn't surprise me to see the market rally and gold go up too. Of course, GDX will follow gold, not dollar for dollar, but you can overlay the charts and you'll see they're very similar. So where gold goes, GDX will go. So there's really not much need to update that. And then platinum is a sister trade. We have long on platinum. We hit our first target early on, reversed just shy of the second target. But again, the chart is constructive. Could be some more downside, may trade sideways, or we could just go up and hit there. I don't see enough right now to close these trades out. And so I'm going to leave these on for the time being. And if you want an update, if I haven't updated these in a few days, feel free to bump me in the trading room or on the front page under this video in the comments section. And this is was an active trade. I lost this one, dropped off my radar. XAUMF, it exceeded the stop of a daily close below 168. It looks like back here on the 15th. So that one needs to be updated. I'll post an update on the front page. If you're new to the site, All trade ideas, win or lose, are always followed up with either, in move to the completed trades with a front page post, either when the final target is hit or when the maximum suggested stop is hit. And that's for accountability purposes, it's for tracking purposes, so you can go into the completed trade categories. Even non-members can go in there. That's one thing I do different, I believe, than just about any other site I've ever seen. All trades, win or losers, are archived indefinitely, so you can go back in for both, track record purposes and for a reference. Hey, if I'm a year from now, we might trade this stock, and you can go in and look and see how it's behaved. You can see the runs. You can see how well it acts to the technicals. Yeah, and by the way, as I'm updating this, I still very much like it. Look at this big divergence. It just may take a little time to play out. Like I said, gold is somewhat consolidating, but still looks constructive. The near-term outlook is a little unclear to me in gold, just as with this one. But I do think this has potential, and I may revisit this and consider adding this back as another official trade soon. All right, let's wrap it up here. I think I covered all the active trades on the site, gave you a few extra potential trade ideas as well. And as always, if member of the site, if you're a gold member, you can ask questions on any trade ideas, not just official trades on the site. If you have your own positions or something you're considering, that's what the value of a gold membership. Just drop me a line in the trading room. Best if you can tag it with my username, the @ sign, and then RSOTC, right side of the chart, my username, or RSOTC, and that will give me a notification, and then I'll get back to you. All right, this has been Randy Finney with Right Side of the Chart. Have a great trading day.